Welcome back to Dinar Trend Tracker channel. Imagine for a second if I told you that somewhere in the world's banks and other financial institutions, something enormous is being planned behind closed doors that has the potential to shake up the global financial system. Both of these currencies were previously disregarded. The Iraqi dinar and the Vietnamese dong have gone from being mere talking points to the focal point of very heated debates. The CBI, Iraq's central bank, and important Vietnamese financial institutions are currently making big movements. What is changing, why are banks taking the lead, and how could this change affect markets around the world? We'll explain it all today. Get a cup of coffee, find a comfortable spot, and stick around to the very end. The reason the dinar and dong could be penning the next major chapter in financial history will become clear to you after we finish. The world's financial markets will begin to readjust in 2025. The reevaluation of stances by central banks globally has been prompted by inflationary pressures, currency realignments, and changing trade dynamics. Iraqi dinar and Vietnamese are displaying fresh signs of strength amidst all this chaos. Global attention is beginning to focus on both nations as they undertake significant banking and economic reforms. Stabilizing the currency and bringing it into line with international norms have been the goals of the CBI's recent modernization campaign in Iraq. In the meantime, Vietnam's central bank has been making adjustments to monetary policy in an effort to keep inflation under control and the currency stable while still sustaining economic growth. When taken as a whole, these two developing economies are making it clear that they will no longer be spectators in the global financial arena. They're gearing up to take on a more significant role. When major changes are imminent, the financial industry is often the first to notice. Commercial banks in Iraq have started taking steps to improve their digital systems, become more compliant with international transfer procedures, and work more closely with the Central Bank of Iraq, CBI. While these changes may seem technical, they actually show that a country is getting ready to be more financially integrated. A comparable shift is taking place in Vietnam's banking sector. With the establishment of new collaborations between public and commercial organizations to facilitate increased levels of global trade. In most cases, policy shifts are imminent when financial institutions take the lead. Since these changes are seldom arbitrary, analysts and financial watchers are paying great attention. Prior to monetary policy changes, revaluation talks, or moves toward currency liberalization, they are common. For a second, let's take a step back. When compared to its state only a few short years ago, the global economy in 2025 seems very different. Countries are reevaluating their commercial strategies in light of supply chain disruptions, post-pandemic recovery, and geopolitical realignments. New trade routes are being shaped by oil manufacturing and digital finance. Two key nodes on the global commerce map are Iraq and Vietnam, with the former boasting enormous oil reserves and the latter spearheading Asia's manufacturing surge. When economically promising nations start enhancing their systems at the same time, investors pay attention. Because of the interplay between policy decisions, infrastructure projects, and long-term objectives, global investors are keeping a close eye on their currencies as well as other national assets. Among Iraq's most dynamic institutions this year has been the central bank. The Central Bank of Ireland, CBI, has been working to make the financial sector more robust and open by doing things like updating banking rules and implementing new digital payment methods. Leaders in Iraq are resolute in their pursuit of diversification, despite the fact that oil revenue continues to be the country's lifeline. The reliance on oil exports has been diminished via the introduction of significant projects in renewable energy, agriculture, and building. In order to encourage business ownership and job creation, the government is collaborating closely with private companies. The stability of the currency is directly impacted by all these developments. The value and reliability of a currency tend to rise with time when the local economy is robust and has multiple sources of revenue. Vietnam, meantime, is a spectacular economic story in Asia. It has been developing into a manufacturing powerhouse on par with bigger countries for quite some time. The export of textiles, machinery, and electronics is on the rise. A combination of the government's drive for technical improvement and efficient trade agreements, along with rising investments in Vietnamese production by international corporations, has kept Vietnam's economy moving steadily upward. To back up this expansion, the State Bank of Vietnam is meticulously controlling liquidity and exchange rates. Gradual appreciation is well within the realm of possibility for the Vietnamese dong. Foreign investors are becoming more confident in the country's ability to maintain long-term stability and economic discipline, which is particularly encouraging. Iraq and Vietnam could look completely different from the outside. One is a Middle Eastern oil behemoth. Southeast Asia is home to the other, a manufacturing engine. The two countries do, however, have a common ground: the resolve to fortify their autonomy in terms of their financial situation. They are becoming closer to international systems as a result of their central bank's understated but substantial modernization initiatives. Both nations are embracing cutting-edge banking technology, strengthening their currency management systems, and participating more actively in regional trade relationships. As a result of these measures, their currency may gain more traction in global trade. So, it's not only reform on a national level, we're also seeing a change in financial power on a regional level. The CI has made a number of headline-grabbing measures in recent months. New currency control mechanisms, improved cooperation with local banks, and digital tracking of foreign transactions have all contributed to a more trustworthy and open system. Improving liquidity management, promoting financial inclusion, and upgrading the CBI's international banking software are all significant moves. They fit into a bigger scheme. Stability seems to be the primary goal of the bank's strategy, followed by slow expansion. In order to create a more stable currency environment, central banks are updating their operations and increasing their reserves. In the opinion of those who follow the financial markets closely, such fundamental shifts are required before any meaningful discussion of revaluation or currency adjustment can take place. Digital transformation is a major factor influencing the future of dinar and dong. In an effort to increase the usage of electronic payments and online banking, Iraq has initiated a countrywide digital banking project. In addition to making things easier, this change will aid in monitoring and stabilizing the money supply. Fintech is thriving in Vietnam. The flow of funds is changing due to innovations like mobile payment apps, blockchain-based solutions, and financial systems powered by artificial intelligence. Modern financial systems both decrease and improve confidence, and these technological advancements make both countries more appealing to international investors and trade partners. Currencies often gain strength as confidence rises. The shift to online banking is more than just a desire for convenience. The goal is to get ready for a more active role in the global financial system. The world's banks and other financial organizations are taking note of these shifts. Iraq and Vietnam are now being added to the emerging market watch lists of global banks and investment groups. This kind of focus takes time. It grows when changes are believable and consistent. Like Vietnam, Iraq is actively participating in regional and global economic platforms, and both countries are seeing an increase in trade with major economies. International institutions perceive reduced risk and increased potential as both nations persist in modernizing their financial systems. A more robust currency, higher credit ratings, and larger foreign reserves are all possible outcomes of these early indicators. Oil exports continue to play a significant role in Iraq's economy, making the stability of the dinar highly dependent on global energy prices. On the other hand, Iraq can reinvest its oil income in non-oil industries as renewable energy becomes more popular and oil markets stabilize. As a result, Vietnam's export machine continues to function well. Both nations are playing to their strengths as trade channels grow toward North America, Europe, and the Middle East. The combination of robust fiscal management with oil and manufacturing produces an economy that can withstand the test of time. Currency growth is supported by this kind of durability, which is preferable to erratic swings. Investors from throughout the world are looking for that. Foreign direct investment, FDI, is another assurance signal. Investors in Iraq's energy logistics and building sectors have recently shown a resurgence of interest. Major infrastructure projects are currently under process, with funding coming from both local and foreign sources. Conversely, Vietnam is still a magnet for A-listers in the tech and manufacturing industries. Expertise, employment, and long-term commercial ties are further benefits of foreign direct investment, FDI. When people put their money into a country, it's a vote of confidence in its currency. There is a direct correlation between the strength of the currencies of Iraq and Vietnam, which are currently at an era where long-term investment is being encouraged by consistent policies and steady governance. Significant regional integration is a further motivator. By coordinating infrastructure and logistics, Iraq has been trying to fortify its commercial connections with its neighbors. Its economy benefits from the country's involvement in digital trade networks and regional energy projects. Simultaneously, Vietnam maintains its stance within important trade agreements, including alliances in both Europe and Asia. Local currencies and regional transactions tend to see an uptick in demand as trade expands. More international use of the dinar and dong is a crucial step toward their eventual global acceptability as currencies. Economic policies are only one aspect of these regional shifts. They are foundational elements for achieving future financial autonomy. Above all else, trust is the bedrock upon which currencies are built. And that is precisely what the Vietnamese and Iraqi militaries are constructing. International financial actors are regaining faith in the CBI as a result of its dedication to openness, stricter regulation, and collaboration. The same is true in Vietnam with data-driven decision-making and consistent policy-making. Investors and dealers are more inclined to utilize a currency if its financial system is more predictable and transparent. For a currency to appreciate over the long run, transparency is crucial for a number of reasons, including controlling inflation, reducing corruption, and attracting institutional investment. Although it will take some time, both nations are exhibiting consistent behavior that indicates genuine improvement. The people are always the ones who feel the effects of currency talks, no matter how sophisticated they may sound. An increase in buying power and a decrease in inflation for average Iraqis might result from a more stable dinar. Salary increases, greater purchasing power for savings, and assurance for local companies to prepare ahead could all be outcomes. Maintaining wage growth and improved access to imported goods are both facilitated by a stronger dong in Vietnam. Stable and strengthening currencies signify development, both numerically and in terms of quality of life, for both countries. The human aspect of economic change is frequently disregarded, despite the fact that it is the end objective of all monetary and financial policies. Naturally, obstacles are an inevitable part of any change. Problems with bureaucracy, political disputes, and reliance on oil money persist in Iraq. There needs to be a balance between fast growth, inflation control, and global competitiveness in Vietnam as well. From regional trade disputes to worldwide energy transitions, both countries face external pressures. But this is the part that sets this time apart. Rather than focusing on quick remedies, both nations are preparing for the future in order to tackle these difficulties. It sends a clear message to markets that these currencies are becoming more stable, which is an indication of mature national financial management. The impact of a strengthening developing currency, such as the dong or dinar, extends well beyond national boundaries. The result is a shift in geopolitical clout, investment patterns, and trade balances. A decrease in dependence on established global reserve currencies and the rise of new, autonomous trade networks are both possible outcomes of stronger regional currencies. Because of this, a lot of economists think that what's happening in Iraq and Vietnam is only a little piece of a bigger global movement, a rebalance of financial power. There will be more variety and resilience in the global economy as a whole when nations upgrade and fortify their currencies. What comes after this? The upcoming rounds of monetary policy statements from the State Bank of Vietnam and the CBI are being eagerly watched by experts. Their eyes are peeled for any signs of new digital banking frameworks, changes in reserve ratios, revisions to exchange rate management, or signals. These countries' currency adventures can be summed up by the smallest policy detail. Keeping up with the latest news is the best course of action for viewers and investors. Knowing the reasons behind these changes will help you be ready for when they occur. The future of the dinar and dong can be better understood with the release of additional information and openness. The Iraqi dinar and Vietnamese dong stories are ultimately about more than just currency rates. They are tales of perseverance, change, and the bravery required to restore faith in monetary institutions. The experiences of Vietnam and Iraq demonstrate that countries may overcome adversity by continuously reforming and working together on a global scale. This is a pivotal moment to keep an eye on if you're an investor, an analyst, or just someone interested in global economy. Because world history isn't made on the spur of the moment when two currencies start to rise. Institutions and individuals that refuse to sit on their hands are gradually constructing it. If the CBI and banks take the lead, then watch this space. The word may only be getting ready for something bigger. If you want to stay up to date on the Iraqi dinar, the Vietnamese dong, and all the other worldwide financial developments, like, subscribe, and share this video. Here at Iraqi Dinar News, we strive to bring you up-to-date information about the world of currencies that are changing the way the financial industry operates.